Welcome back, everyone. This is Thomas Triple T Tie with another new bullish crypto analysis. Before we dig in and take a look at Bitcoin's daily analysis, remember this is for edutainment only and not to be considered as financial advice. Additionally, I would appreciate it if you could help spread my analysis to others by smashing the like, ring my bell, hit subscribe if you haven't, and share your thoughts in the comments below. That helps the YouTube algorithm to spread the analysis and promote the analysis, especially for newbies. So let's dig into the news first, and then we'll dive into the analysis. Here, fresh off the press here, earlier this morning, Fidelity announced that they're offering 401k investors access to Bitcoin. This is the first retirement plan plan provider to do so. This is not really true because others have already allow for retirement accounts to be. Well, wait a minute. No, that's different. 401k is different than like an IRA or something like that. So yeah, that's true. So they're the first. So that's awesome. Showing more adoption. Fidelity is pretty assertive as far as compared to other traditional financial institutions towards crypto. I think they're moving in the right direction. It's one of those situations where you either grow with it or get left behind, like Blockbusters or Blockbuster. Fort Worth is the first city in the U.S. to mine Bitcoin and will run a mining rig out of their city hall. Pretty cool. I used to live near Fort Worth. I lived in Dallas for a bit, and Fort Worth, that's pretty progressive for Fort Worth. And they have a new mayor. She's a millennial, Maddie Parker. So good for you, Maddie. Way to get in front of the technology stuff. So I think they're gonna have a couple S9. Oh yeah, the Bitmain Antminer S9. They're gonna have a couple machines, 3 I think. Yeah, 3 machines running. So that's really cool. Texas is kind of weird. You know, they promote mining, but they have some of the most rigorous crypto laws. Just weird. Australian Bitcoin spot ETF launch delayed. It looked like everything was ready, and it looks like they're delaying because of this factor right here. The AFR reports of an unknown prime executing broker is behind is the cause of the delay. I have no idea what that is, but hopefully they can go forward with that, because we already have one in Canada and a couple other places. So the U.S. is slightly behind. And if you don't know what a spot ETF, a Bitcoin spot ETF is, it's basically an opportunity to, instead of buying Bitcoin and holding Bitcoin yourself, traditional investors, they can buy partial Bitcoins through the traditional channel and hold part of it. So they don't actually own the coin. They're just able to trade it like stocks, if you will, or like an index fund or something like that. As I need to turn on my mouse highlighter here. Here we go. The crypto market, it's still blood red. It's even worse now than it was earlier this morning. You can see here Bitcoin 37.9, dropped as low as 37.2K. Dominance 41.21. Everything else is red except for this stablecoin right here. Even stablecoins were all red earlier this afternoon. Crazy times. All right, let's go for the market cap here. Crypto market cap, it's down to $1.76 trillion. Down. That's down 5.9. That's a lot of money exiting crypto. Here's Bitcoin right here. Market cap. $722.3 billion. Let's dig into the daily chart here. If you haven't had a chance to check out my earlier video, my special analysis on Bitcoin, where I walked through the 20-day versus the 50-day moving average. You want to check that out. That's a big deal because it pretty much shows historically 100% of the time when the 20 week moving average dropped below the 50-week moving average, 100% of the time Bitcoin dropped at between 50 and 70, slightly above 70%, all the way back to 2014, every single time. And it did that this week. So check that out. Let's go back to the daily analysis here. Yesterday analysis, I mentioned that BTC is likely to chop between 39.5K, 0.6K, and 41K. And then if it put in a lower low, I drew this low here. If it put in a lower low, more than likely it'll head towards 37.5. It did do all that, and then but a little shy. Here's the big giant daily candle here. It wicked all the way up to 40.8K, so that's pretty good, right? 41K, and then it wicked up as low as 37.7K. That's $200 off from 37.5K, right? Pretty good. Bitcoin is at the bottom, currently at the bottom of the Bollinger Band here, and that's 38.2K, and that's when it hits the bottom of the Bollinger Band, and that's oversold. That's a signal. Let's see what else we got here. We already talked about it wicked below. It's riding the right now. It's riding this this lower low trend line here, and in fact, it popped back down since I did this preparation for this chart. It dipped back down, and that's really bearish that it's going low like that. And if it stays below this, that's extremely bearish. We could more than likely probably hit 37.5 here easily if it stays below that lower low. BTC has been below the Bollinger basis, which is the middle line of the Bollinger blue line here. It's been below that for 21 days, and I've mentioned this before. 12 to 38 days were recent periods where it's been below that. So it's got a bit of some more room to go. The 37.5K, which is this green line here. I should make that bolder for you. Actually, it's already pretty bold. Maybe I just make a dash instead. There we go. So this 37.5K is the next major support, and the this line here, 39.6K, that should now be resistance. So we'll just change that to resistance. There we go. And let's get rid of, change this to resistance now too. There you go. So that's so 37.5K is major support. 39.6K would be the major resistance, and want to track this lower low line here too. Volume wise, it's hard to see, but it's currently, see this reddish solid line here? That's the highest volume traded price level, and it's right in that range. So this area is very historically has high traded volume, going back all the way back to early February 2022. Down below here we have the current daily volume is over the moving average for the second day in a row. KDJ line, the white J line of the KDJ deflected down against the blue K and the red D lines and flipped back down to 14. I gave that a bear, and 14 is below the start of the lower range, which is 20. So it's entering the lower range. For the white MACD line, it almost touched the red line, slightly off a little bit, and then flipped back down sharply. MACDs don't do that. MACDs tend to kind of have curves, but this was a pretty sharp flip. and it flipped down to a negative 947 under the red signal line, printing its 22nd consecutive more bearish, slightly taller histogram bar. Notice how the color changed to deep red from whitish or pinkish. I gave that a bear too. Red RSI, blue CVD, and the white momentum indicators all flip down sharply. You can see that right here. The red RSI line is at 37, and that's below the 50 middle mark. I gave that a bear. The blue CVD, cumulative volume delta line, is at 1.809 million, and I gave that a bear too. And if you look at the, that's still within like the, it's now entering the lower range as far as cumulative volume is concerned. The white momentum indicator is at negative 2,255. It's right here. So we have decrease in momentum, bearish momentum, but you may be wondering, okay, well, this candle's pretty tall, so we'll wait and see what happens there. So that's a bearish too. So we have bearish all over in these indicators. So so that's very bearish, and I gave it 3 bears. I haven't given it 3 bears in a long time, so I gave it 3 bears. And let's take a look at some other, because it just, 3 bears, because it broke so many strong support. Broke this ascending support, this thing that's been there for forever. And then it broke this lower low. It just broke all these other upper ones. Yeah, it's super bearish right now. And the 20-week moving average dropping below the 50-week moving average. That's just extremely bearish. So very bearish. So prepare your low entries. As far as entries, they're still the same. Let me move this out of the way so you can see here. FOMO, get rid of this. Here we go. FOMO 37.5 still, 15%. Again, not financial advice. 35K, 20%. 32K, 30%. 30K, 25%. All the way down to 25K. At 10%. So, and those levels have those low levels have been there since others have said that we're gonna go up and from 41K. So, anyways, let's hop over to the options max pain. I wouldn't trust these because right now the macro environment pretty much dictates the direction of the price. Equities, correlation with equities. But anyways, this is for you. 39K on the 27th, 28K, 39K, 29th, 41K. This is it's one that would be interesting to watch because it was 42K, then it dropped to 41K. On May the 6th, 40K. And here, volume are contracts that have been filled already. You can see here on the 29th, we have a lot of contracts that were filled, especially for puts. And that's the options to sell. It's usually bears buy those. So like, and for, I don't have time to go into it. But anyways, for the open interest, we still have decent amount of open interest. There are contracts that are not closed yet. They're still pending. There are more calls. Calls are options to sell on the 29th. But notice the one that are closed, you have more puts. So anyways, 29th would be the day to pay attention to. The other ones, not so much. Here's the heat map here, a close up for you. You can see the rise and the drop here. And you notice the big, thick sell wall on top, pushing down price right there. That thing rises just on top, trying to put pressure on price. It's a lot of it's spoof. If you can see, it just changes over time. And down below, we also have some spoof walls down here for buy walls. Notice the 38K wall that's been there for quite some time got crushed right there. That wall was real. At least some of it. Some of it actually moved down back here. It dropped. So as far as cumulative volume delta, it's still showing aggressive market sells, this red line here. But it's not that aggressive right now. Super aggressive would be down at this point right here on the meter. Let's look at a zoomed out view of the heat map. We have sell walls on top, buy walls on the bottom. 50K sell wall still there, but not much below that as far as big giant walls. However, you can see the huge support here, buy walls here for just below the current price in a zoomed out view. The 35K, notice is getting thicker, bigger right here, the red color versus more yellowish here. And then the 32K was there and then disappeared. I think what it did was part of it would moved up here. And then the 30K wall is still here. And 25K and 20K. If you in this view, again, aggressive market sells here. As far as liquidation levels map, we have, this is for Binance 20x to 100x only. We have about negative $3.45 billion excess. Cumulative liquidation levels delta. Delta just means difference. What that is the money in open interest for the high leverage short positions here minus the high leverage long level, the money in the longs, then you get the excess, the difference, and that's this right here. You know, sometimes in normal conditions, these kind of factors could drive the price. When someone takes a counter position with high leverage and then move the spot market, but right now the macro environment is literally the bus driver. That thing is just driving the price right now. So this thing just gonna move right along with it. And you can see as the price drops significantly here, all these longs get liquidated right there. And we're back to the chart. I hope you enjoy the video, and please check out the other video, the special analysis on Bitcoin, and feel free to smash the like, ring my bell, hit subscribe to help spread my analysis to others, so that they can have consistent analysis on top quality cryptos, and including Bitcoin. I appreciate it. I got to head out to volleyball and host a volleyball event. So I'll see you. I have one more video today. I've made a lot. So I'll see you then. Peace.